Okay, students, good morning. Now we are going to do problem number 21. Only 8 transactions are there. Same rules. You can look at the rules available here. Personal account, debit the receiver, credit the giver. Real account, what comes in debit, what goes out credit. Nominal account, expenses and losses debit, incomes and gains credit. So as usual, first journal entry is commence business with cash. Cash is real account. Cash is coming into business to be debited. To be debited. Cash account data to capital account. Trader is introduced the business and cash into business. Trader is giver. Personal account, giver credit. Paid rent in advance. Rent in advance. Account data. Rent in advance account data to cash account. Amount is 500. Rent paid in advance. Okay. Purchased goods for cash 15,000 and credit is 10,000. What we purchased goods? Goods are real account. Goods are real account. So as per real account rules, what comes in debit? So goods to be debited, in the sense purchases to be debited. Account data. Cash amount is 15,000. And to credit. So person who supplied the goods are called as creditor. Maybe his name is there. Now we are calling him as a creditor. 10,000. 25,000. Goods purchased for cash and credit. Right. Bought motorcycle for personal use for 6,000 and the payment made out of business money. Okay. So personal use is called as drawings. cycle purchased for personal use. Received cash for bad debts written off last year. So we received cash account data. Bad debts written off. Amount is 100. X, a creditor of the firm, became insolvent. A first and final payment received from his due, total due is rupees 200. X, payment of 60 paise in rupee was received from his total dues of 200. So one person is there, his name is X. He is unable to pay the amount 200. When we forced him, he told that I can pay 60% only. So we received cash. How much percentage? 60%. Account data. So remaining 40% is bad debts. Bad debts means which we cannot recover. From X to X account. X is a giver. $200. Okay. X is a debtor. X is a debtor. His dues are 200. His dues are 200. And we received first and final dividend of 60% received from his total dues. Out of 200, 60% of 200 is received. Balance is bad debts, which we cannot recover. Which we cannot recover from him. That's why it is called as bad debts. A amount received from amount received from X, final settlement. Goods worth rupees 500 taken away by proprietor for personal use. So goods taken by the proprietor for personal use. Personal use is called as drawings. You have to remember this. Drawings account data. We have to credit the purchases because personal used goods to be credited to purchases. Amount is 500. Check of 4,900 received from Mohan against full settlement from him. The check was deposited into bank on the same date, intimates dishonoring of checks. Okay. Mohan amount is right 5,000. So there are three transactions. One is we received check from Mohan 4,900. Later, that check was deposited into bank. Later, that check was dishonored. First, we will receive check received from Mohan. Check received is treated as a bank account return. So out of 5,000, so from Mohan, this amount is received from Mohan. Mohan is a personal account and he is giver. Mohan is a personal account, he is giver. Giver is credited. According to the rules, giver is credited. Okay. Now, Mohan account is settled. Next transaction is this check is credited into check credited into bank, check deposited into bank, cash deposited into bank. Three are same. Okay. Now the entry will be bank account data to cash account. Amount check amount is 4,900. Check deposited into bank. When the check was deposited into bank and bank intimated that check is dishonored, in the sense there is no money in Mohan account, so bank unable to collect the money from Mohan and it is unable to credit to our account. That's why Mohan due will be as it is. That's why Mohan account data to bank account to discount account. We are cancelling the Mohan account, 5,000 rupees. Check dishonored. Okay, so these are the entries. Before that, you please remember the rules. All the journal entries I passed are based on the rules only. Types of accounts are three, and their corresponding rules are debit the receiver, credit the giver personal account, debit what comes in, credit what goes out real account, debit all expenses and losses, credit all incomes and gains, nominal account. So we passed journal entries using the same rules. Okay, students, I last class we discussed about accounting equations theoretically. Present this lecture or class we are practicing this accounting equation by taking an example. So I hope all you know commerce where you can easily understand assets, liabilities, and owner's equity or capital. Others, those who are not having accounts background, they feel very difficult to understand what are assets, what are liabilities, what are owner's equity. So that difficulty we may overcome in physical class whenever the physical classes are active. So before that, we try to understand what exactly accounting equation is. So this is our syllabus. You can't find accounting equation in the syllabus, but you understanding the accounting concepts, that is dual aspect concept. We are practicing this accounting equation. Okay? Before this accounting equation theoretical video, I explained accounting standards, which are rules and regulations for accounts. In that also, I explained single entry system, double entry system. The single entry system is only regarding assets, cash transactions, assets, okay, only personal accounts. But under double entry system, the transaction is recorded in debit as well as credit. But technically prove that debit is equal to credit under dual aspect. So the basic accounting equation is foundation for the double entry bookkeeping. We in next video we are going for types of accounts, rules of accounts, debit receiver, credit giver, receiver giver like that. So before that, with this practical may help us to understand double entry bookkeeping. So the equation explains like this. Assets are equal to liabilities plus capital. The assets of business are equal to the sum of liabilities as well as creditors or capital. Okay. So assets are having relationship with the liabilities and capital. Accounting equation helps to understand financial statements, which are prepared quarterly, annually, and which are directly linked with accounting equation. These equations entered in business general ledger will provide material that eventually makes up the foundation of business financial statement. And you know very well, our process will start from our accounting economic activity, and that activity is measured in financial. That financial activity is recorded in form of journal entry. That journal entry posted into ledger accounts. Balance of ledger accounts are posted in trial balance. From trial balance to our financial statements. So our financial statements are output, but the input is financial activity, where this activity is put in the equation. It is a accounting equation which is based on double accounting or dual aspect concept. Double entry bookkeeping. For this double entry bookkeeping, accounting equation is the base which is developed from accounting concept dual aspect. Investor always understand what is the value of this investment with the help of this accounting equation, that is assets are equal to liabilities plus owner's equity. Suppose I invested 4 lakhs. I invested in a company